Okay, let's get rolling here. Again, it should be, we'll keep it tight, quick, and sweet here. I think I know what I want to talk to you guys about, obviously. And by the way, how's everybody doing? We're getting a blizzard on the East Coast. I'm getting 2 feet of snow, so I got a little running around to do, just in case I get barricaded in. But we got it's pretty clean cut out there right now. Remember, we're talking about a market that's been really frustrating and confusing. Okay, and a lot of people think just because the market started going down this year, the confusion and frustration just started. This has been going on for a long time, right? We spent a lot of time on the damage that's been done under the hood, severe damage. Okay, so I think we're finally getting to a place, and it took the reset, right? It took a wash, like we were saying. We're getting to a place where things are going to start to make more sense. And I think once we get through next week and we can stop using excuses for every sweep that we may like, with earnings and pre-Fed and all that shit, I think we're going to start to see pieces of the puzzle come together. We may not like what this puzzle ends up looking like, but like I said, things will make sense. And I'm content with that, as long as, and I use the word clean, that's all I can really ask for. That's all I can really ask for. I want to at least be able to see what the hell's going on. So this way I can weigh, my decision on whether risk is worth taking, in buying anything. All right. So let's talk about, quickly, we'll go over just, a lot of things have happened in this pullback. And I think, as many of you know, why is this? Hold on. Oh, wow. Okay, I'll get off. I'll get to what I'm wowing to in a second. But you guys have heard me mention in quite a few of the write-ups, and even if you're in the room during the day, as far as sentiment is concerned, I don't think there's much else to do. We don't need any more selling. There's been more than enough. The drawdown has been violent, vicious, and quick. Okay. There are a couple of readings that can also join the bullish club, right? And flash green. But I used this analogy the other day. You're trying to get too cute. Like, we could sit here and say, oh, we want this, we want this, we want this, and you get to a point where you keep waiting for more and more and more, and, it never comes. Okay. But on the sentiment front, right, just sentiment being washed out on an intermediate term basis, you're pretty much got it. You got it. Okay. And now it's just a matter of, is this crashy? In other words, does the sentiment support we have here that's pretty solid, they run through that because there's something a lot bigger at play, right? There are stronger forces at play. And that's where you get the COVID crash, right? That's where you get the end of 2008, where nothing matters, okay? Or what's more likely, okay, or more usual, more common to happen, is you get, again, not exact levels, but you get this zone to hold. And there's no set target on the upside. There's nothing really you need to see to create a target and what to look for. It's basically this simple. What they do is they need to wear out all the bearishness that came through this. Okay. So what I'm getting at is, at the least, what you usually see, okay, is this level hold. You get a rally, you could get down, you can get up, you could get straight rally. But ultimately, when it's all said and done, all those sentiment indicators that are flashing green right now, and we'll, right after I go through this, we can talk about them, are at the least back at neutral, if not many times flashing sell signals, as crazy as that sounds. Okay, so that's where we're at right now. Okay, and again, if you remember on private Twitter, I one of the night post-market notes I wrote up, I took 2 screenshots of just basically at 2 points of the market where what I just explained to you played out, and the COVID crash, right? So here was COVID, okay? And you had this, see this? And it held for a couple of days, and then bloop, you see how it exploded through it? Like sentiment support or nothing meant anything there, because obviously it was in the start of a pandemic with nobody positioned for, right? Nobody knew what the hell was going to go on, right? So you get a crash, okay? It's an exogenous event, all right? That is the more rare scenario, but you have to factor that in because there are odds for that, right? And the more likely one is what we spent a lot of time on, okay, which is kind of this, right? And again, forget when you go back and look at different times throughout history that we went through something like this, you're not looking at exacts. You're not looking at, oh, this went up to here and then came down to here, so wait for that. You're looking at, the time, the process, of what went on. How did they wear out the extreme bearish sentiment? So what I'm telling you is here, okay, many of the sentiment indicators we're seeing now light up green were lit up green there, okay, for the most part. And same thing we were talking about then, whether this thing rallied back to test highs again, or you did something like this, by the time this was over here, believe it or not, all these bullish signals were gone, right? They were gone. At the least, back to neutral, some of them, I kid you not, were flashing heat. In other words, telling us to be careful because people are too bullish, right? And you don't realize it now when you go back and look, but when at that time, people calling double bottom, we're going to new highs, you know what I mean? Everything, the tune starts to change when you see constructive price action. All right, and ultimately, this happened. Okay, so what I'm getting at is we can be in the start of a bear market here very easily. I don't think anybody really knows yet, to be honest. Okay, nobody ever knows, but I don't think anybody can even claim they have an idea of whether we're in the start of a bear market or not yet. Okay, but even if we are, there is a higher probability that they need to work off all this bearishness and de-risking and all this stuff that's happened this downturn. All right. So what do you look to do there? What do you look to play? Right? How do you go about looking to take advantage of that? One is you look exactly what we've been seeing is ideal. Okay. Why? Because instead of chasing a rally that just keeps running away from you, every time you get some selling, all right, and especially when we get flow back into the mix and we got that edge again, right, you can do some buying, okay? Whether that's intraday, whether that's swing trading over the course of days, or, maybe you want to use that entry for some stuff further out, right? That's each and every one of us have different outlooks on things, okay? But, even an example like today, okay? And the flow wasn't crystal clear, but it was better than what it was. We had basically, so you think of this, right? You got sentiment support here. That's the way you got to look at it. We got sentiment support here, okay? And every time they push and try to drive price action through that, and you see sweeper activity come in and start to buy that, you're likely going to get these sharp bounces and squeezes because they're going to catch bears flat-footed there. You know what I mean? All right. So that's the, again, not the easiest way, but the first way to think about how to take advantage of this setup, okay, is use this sentiment to your advantage. When it looks like things are getting dicey, it looks like the market's going to roll over, everyone's getting bearish, there's a little put action out there, and then you start to see around the call activity come in and the tide turns, right? The likelihood is you're going to get a decent bounce off it. All right. The other thing, and that's once we get call sweeper activity more, what the hell is that? Oh, once we get call sweeper activity back on our side again, is stock picking is one of the better things to do. Okay. And the reason why is this, I gave you guys this example in the past a couple times. Back in the 2008 scenario, okay, this rally doesn't look like much. Again, they never do when you're looking back at them, right? So this, let me go like in the heat of the moment so you could see, okay? This rally doesn't look like much here, but not only did the markets and the major indices bounce, the names, because of the selling that was involved, the names that rallied with the market, there were some big moves. Okay, and they didn't all rally at the same time, right? So you would see sweeper activity in the big FANG names initially, right? They would rally with the market. Then it start to spill over into some laggards and you get squeezes there. Then some of the shittier companies would catch flow and then they would squeeze. You understand? So you had a period of bullish flow and price action, you know, for a good month and change, right? With several opportunities. All right. So that's kind of what you got to look at. And that's kind of what the way I'm looking at what we got here. Okay. To get in now, you know, a lot of us, what we're looking for to really step in and get aggressive and build positions, right? We want to be able to have the conviction that not only is this low going to hold, what am I doing? I could just do that and get there quicker. Not only is this thing going to hold, you know, for a month to wear out some extreme sentiment, but, you know, we want to have some high confidence that this is possibly a bottom and the start of a new leg higher, right? That's where you want to lean in and start building positions with time. Okay. We can't make that call yet, I think, with any more clarity or as much clarity as we would like, right? So like myself and a lot of us, what we want everything, right? We want Sharpies to get in and stick their neck out, right? Right away, boom. That gives me conviction. All right, the smarter money now is getting aggressive here. Okay, now I'm going to get aggressive here. Okay, so you get that extra push, you know, and again, Sharpies usually come in, not all the time, but usually come in at major lows, right? They're not trading, right? Sharp hedges aren't trading. Okay, they're not looking to be nimble. They've been hedged for months now, right? Missing on the upside. So that would give us conviction. So for me, I look at it as this, okay? And this is in simple terms, okay? It's pretty much how I've been looking at it, maybe a little bit differently, all right? I already started, as you guys, well, if you remember, you know, I have some S&P 500 exposure. I got some decent time with it, so I don't have to stress it. I have April's, okay? I am not looking to flip that. Okay, I'm not looking to take a quick squeeze off the table with that unless I see something major that, you know, I'm not comfortable with. All right. And I have, and this is why I wanted to do it, right? I have that ability to add to it if we continue to get this type of stuff. Okay. I have the ability to add to it if I see some other things I like, flow or Sharpies get involved, whatever the case may be. And in the meantime, what I'm going to do is I'm going to look to do what I've been doing throughout and trade on the more tactical side around it. Does that make sense? All right. For individual names, for me to buy individual names, it's not even a thought on my mind right now. How can I buy individual names? Even if you told me, okay, that this was the absolute low and guaranteed that to me, I still couldn't buy individual names, right? What happens if I land on a Netflix? What happens if I land on a TER, whatever the hell that symbol, you know what? Any of these things can blow up off earnings and it's got nothing to do with anything, right? It's an added risk that has nothing to do with anything we're talking about in the market. And I don't think people realize that. You know what I mean? I don't think people realize that. That's why the flow is useless right now in regards to finding any sort of edge for swing positions, because at any given point in time, this could happen. And it doesn't even have to happen in the name you own, right? It could happen in the same group and it's going to take down that name with it. Okay. If Apple, instead of beating, or Microsoft, instead of beating, happened to be that fluky time where it shits the bed, all those stocks, they get beat up, right? Now, maybe they get bought after they get beat up, but initially they're going to get beat up. So that's why for individual names, it's not even on my radar yet. Okay. When it will be on my, at the earliest, come the end of next week. Okay. If I start seeing sweepers stepping into names that have been demolished, okay, I don't need Sharpies to go all in on the overall market, okay, because there could be outperformance all day long in individual names in this market, right? We've been talking about that. There's been a full-fledged bear market going on for a year in this market, to not just one sector, to half the market. You know, so you're going to find names like we were talking about, right? Like this, okay, that again, this thing could end up at zero in 3 years, okay? It could end up at zero, but before it gets to zero, there's probably going to be plenty of squeezes where this thing rattles off 50, 60 points. So, you know, these are the things I'm looking for post earnings. You know what I mean? But I can't, there's no reason to jump the gun because again, we don't have that information. Maybe sweepers, they don't even touch these things. It's very possible. All right. I'm not just going to go out and buy them just because they're oversold. I would have bought them already and got crushed. You know what I mean? So, you know, again, for me, it comes to the signals I have faith in over the course of my career and what I have confidence in, and they will dictate, you know, how aggressive or how more aggressive I become, right? Or if I need to rein it in and sit tight, because who knows, right? Maybe this is the start of a ferocious bear market in the indices. It's very possible. Okay, but what I'm telling you is there will be opportunities in individual names regardless. That's what I can almost promise you. Get to rewind, and a lot of you have heard the story. When the tech bubble blew up, okay, it was a period of tough time initially, but after that initial whoosh that took down everything with those NASDAQ names, I had the best time of my career. I made the most money in my career that stretch from the tech bubble. And I didn't touch one NASDAQ tech name, not one internet name. They were all going to zero, okay? But there was half of the market that you felt like you were in another country, another world, the way they were trading. And that's a very realistic, you know, scenario here. right? Even if I'm saying, even if worst case, we're in a bear market, even if worst case, we're in a bear market, yeah, what this, we talked about this too. Last tree for me, last year from the summer up until we just rolled over now, that's as bad as it's going to get for me, as conservative as I'm going to be. I felt like I was handcuffed. I couldn't trade anything. You know what I mean? I couldn't even FOMO or force myself to trade from late summer all the way to the start of this year. Because again, we talked about it many times. We're running on fumes. The only way I could is if I bought Apple or Ford or Tesla for the 18th million time. And we all know you can't do that. You can, but you're asking for trouble, right? So I don't see how it gets, from my experience, it doesn't get worse than that. You know what I mean? It doesn't get worse than that, right? Usually initially when you get the first wash like we just did, a lot of things they come down with it, but we should start to see now outperformance and be able to find some alpha and other things, even if the market is not too great, even if the market's not too great. All right. But this, what we've seen, again, we talked about this risk all the time, Tree. We talked about it every week. We were getting frustrated. This is exactly why we couldn't buy anything, even with stocks down so much already. Okay. We didn't know what happens when this happens to the market. What do those stocks do? Right. That's what we were worried about. And we got the answer. They went lower. Right? They went even lower. Okay, that risk throughout all of this, guys. Okay, we weren't talking about that just at the top, right? From here on, this whole thing here, that was the risk. This here is what you had to factor in to your position in swing trading. Okay. Are you ready for that? Because it's going to come. It's just a matter of when. And do you want to get caught full position? Or, you want to get caught with maybe a position and nothing, or whatever the case may be. And this is why, right? All those webinars, I wasn't trying to be a pain in the ass and brush you guys off with the stocks. Okay. But what I was getting at is it wasn't worth, it wasn't worth looking at a U off a little pullback here, okay? Because if the market pulled back, can you buck the trend and go higher by itself? The odds are no. And it's going to get caught in the sell-off, right? That's exactly what we were talking about. That's exactly what we were talking about. So that risk, that initial risk we were concerned about is pretty much gone now. It's pretty much gone. That's the best news of all. That's the best news of all. Yeah, and that's Lourdes, like, you know me. I see names off pullbacks and I'm licking my chops. But, we were in a real difficult spot when you got the indices and every big name at, the group of big names at new highs going parabolic. And these stocks, are down 20, 30% off the highs. But what happens when the big guys get hit? Maybe they go down less, we were saying, right? No, I don't. Honestly, here's what my gut tells me right now. Okay. I think we get a little follow through on this squeeze. Most likely next week. I think, honestly, things like this, well, you got to watch out for earnings before we even talk about it. See, I see that right here as I'm talking about it. Okay. You got to watch out for earnings because you understand nothing is going to help you avoid that risk. But what I was getting at is I think we see dead cat bounces at the least in some of these things. And I think the indices, again, if you're the size of the bounce and how much I'm being honest with you guys, I have no idea. I have no idea. Like realistically, okay, because this is what initially when we started going down. Remember, I drew it up on that thing, right? So, realistically, you could get a bounce to here and nothing changed, right? Like, I think I drew the line from here, maybe, right? So you could get a bounce from here and nothing changes, okay? And that's what, 45, 50, 45, 45? But there will be names that, while this just does this, there's going to be short squeezes all over the place. Do you see some of these charts? Do you see some of these charts? I can't believe my eyes, honestly. Like this is a crash in half the market. I'm not even talking these garbage companies. There's garbage companies with zero revenue. They belong at negative, not zero. But you're talking about like legitimate growth names. Yeah, okay, they were overvalued. I get it. But people came out of it pretty quickly. Yeah. And Jay, it's not that uncommon of a thing, Jay. I told you guys, I remember, you're not going to believe this, okay? This is so similar to like 1998. 1998, the same thing happened to even big names. I'm talking about big names, Cisco, big blue chip growth names. And then 99, the rest of the story. 98, a lot of these stocks were down 50% minimum off the highs, 50%. And then they came storming back. So it's happened before. Again, I'm not talking about the crap out there, But, like, look, okay. Right? Like, okay, I get it, overvalued. But this got nasty quick, right? Got nasty quick. Even some of the better names that were doing well. Look, right? Pretty quick washes. So it doesn't take much, when the tide turns, these things can bounce aggressively. And even for those of you who are bears out there, it may not change anything, it may not change anything big picture wise. Because listen, I'm not smart enough and not to rain on anybody's parade out there. I don't think any of you guys know what's coming. Okay, you may think you do. The smartest minds have no idea. You know what I'm saying? Whether this ends up being a ferocious bear market or there's another leg higher, but even those guys, and they listen, they know more than us. They got access to more information. You see how they're wrong. This is even like Stanley Druckenmiller. That's what I love about him. He's so humble. He said, this is something you got to look at each and every day, pay attention to the credit markets, because the Fed themselves, nobody has a clue how this pans out. Tepper's in a league of his own, but you'll hear those guys, they're humble, and they tell you this is a time where, because, we never look at the Fed balance sheet. We never did anything like this. All right. So now a lot of you guys were talking about, and I'm on your page, and I totally agree. A lot of you guys are saying Sharpies won't go all in until there's a Fed put. I totally hear that. A lot of you guys have no interest in really diving in until there's a Fed put. I totally understand it. I get it. I think that makes sense if you could do it. You know what I mean? Everybody likes to say, don't fight the Fed when we go straight up and we're rigged for upside. But then don't fight the Fed goes out the window when it tells them they need to be careful, right? You see how quickly they try to look for excuses? Yeah, so that's it. The first, you got the credit markets are what's going to drive the Fed. Okay, did it in 2018, does it all the time. The stock market doesn't concern them going down. Okay, it doesn't concern them. The bond market, the credit spreads, that's what is on their radar. As soon as they start to blow out, you'll see how quick that Fed put comes back in. Yeah, I mean, there's a little bit of movement in these credit spreads, but you know, nothing major. Nothing like, yeah, you're talking about nothing major. The spreads, you got to pay attention to the spreads. Drunken Miller said he would be again listening to the bond market. Yeah. So that, and I think that's, again, if you ask my opinion, I think that's why we've kind of, we haven't squeezed as aggressively as we normally do. Usually, you know, this market should have squeezed hard by now, you know, but I think people are really keeping a close eye on how this pretty aggressive tightening that they claim they're going to do. Again, they haven't really started to run off the balance sheet or any of that shit yet. But what they claim they're going to do, you know, what kind of effect it has, again, not on stock prices, on the more important stuff. And that tale has still, you know, yet to be told here. I'm going to try to get that site where I get that chart, but you can get those credit spread charts from Fred. You can get them from, if you Google it, you'll find them. There are quite a few places you can get them. Quite a few places. Yeah. And listen, yeah, you don't have to examine them. You're going to hear about it. When they start to widen out, you're going to hear about it. And you're going to see the market react accordingly. You know, it's not something that you're going to pick up on before anybody else because there's so many eyeballs on it. And you know, that's when shit has a tendency to get dicey. Right? That's where these pullbacks turn into COVID crashes. You know, when you see them blow out like that. I think the site was like credit spread watch.com or something like that. I got it from a buddy of mine who got it from there. But let me show you guys what I'm talking about here anyway. You know, but on sentiment, we can, we can look at sentiment till we turn purple to the face here. There's a lot of things that look really good. Here it is. All right. So here's where we are now. All right. You can see there's been a little movement there. Here's COVID. This is 2018. All right. So you get an idea. Like, and these have been really tight, unusually tight because of the Fed. You know, so if you start to see this thing creep higher, that's where maybe the Fed's going to start to become concerned all of a sudden. You know, so we'll see. It's hard to predict this stuff, though. You can't predict this stuff. You know, you can't predict it. You can't predict it. That's why for me, you know, I like the simple answers, right? Very simple for me. I have some S&P 500 exposure, okay? If I want to add a little bit more, I could add a little bit more. Even if it's a loser, it's not going to kill me, okay? I'm going to trade, like I said, every time we come back down to the support zone, I'm going to look to get long if I see some sweeper activity. All right, that's where I'm going to look to get a little more aggressive on the day trading and the tactical side. Individual names, when we start seeing flow, we'll talk about that. But for me to get aggressive on the overall market, I want to see Sharpies, right? That's what I want to see. I want to see Sharpies. And why? Because they do all the homework for me. I don't want to pay attention to credit spreads. You know? They do all the homework for me. It's too much going on. Sharpies usually come around the major, the low, the bottom, not those tactical lows. You understand? So like, for example, in late 2018, they didn't show up into all those lows that we were just looked at. They came off the final one. Okay. So this is where they're at right now. Not too promising, but it can happen fast, guys. It can happen fast. You see, look, see how fast it happens? Okay. Right. Like, look at this. Okay. Is this, oh, here you go. Look. Okay. So look at this. This was the final flush in late 2018. Okay. The week before the lows there, we would have been even more negged out than we are right now, off Sharpies. Okay, we would have been like, oh, they're never coming in. They're never coming in, you know? Right, the Fed pivot. And then once the Fed did what they had to do, it's like it wasn't even a thought in their mind. Bing, slammed on the gas. All right? Here, they caught the tippy top literally to the day. And then the COVID crash, that was fast, right? How many weeks was that? That was ridiculous. And boop, they came right in. Most of you remember that. You were around. And they stayed in, So, and you could see, especially after the election here. So you're talking about here. You know what I mean? They've been pretty gun shy. They've been pretty gun shy. Right here into this low, they took off some hedges, get back to neutral here. But then, right, we go back to new highs and, they stay hedged. And this is Sharpie riffraff combined. So it's not really telling the full Sharpie story here. Sharpies have been hedged pretty much this whole move here, right? Oh no, late summer. Yeah, so similar. Sharpies have been hedged throughout that. This is Sharpie riffraff. But you see what I'm talking about here? All right. So for those of you who didn't know what language I was talking, I'm looking for this, for me to get aggressive in the overall market, not worry about names and all that other shit. All right, keep it nice and easy. It's simple, no? All right. And then, like I said, well, next time we have a webinar, again, if you remember, we talk about this constantly, but after next week, okay, little by little, we're going to start to see the flow clear up because you got some earnings that are already announced. You know what I mean? You start to see post-earnings flow. And we'll see if they start buying some of these names, good names, right? High growth names that have been, listen, they were overvalued. They had to correct. They've corrected and then some. Nothing usually goes down in a straight line unless it's real junk. Even then, it's not likely. So I'm not saying we have to buy these things and hold for new highs, but you happen to get lucky and catch one of these things, even bear market rallies. We spoke about this a couple of weeks ago. You can get 50, 60 points on these things and nothing even changed. All right, like something like this. What's wrong with this? You wouldn't take that? No such thing as an ignorant question. Jay, you know that. The smart money index have, hold on. You scrolled away from me. Let me see. Let me make this bigger. Does the smart money index have any? No, smart money index. If the one that I think you're talking about, the smart money index. Oh, no. The sentiment trader smart money indicator is not people. It's a combination of all the good indicators that nail bottoms and tops that have a good track record, and factors them in. You understand? That's what the smart money thing is. It's not actual positioning, real life positioning. Yeah, Frank, honestly, anything you can do, like, honestly, that's without a doubt, that's a good call, good point you make. That's the tough part about trading in this mess options. The volatility and how pricey things are, because IV's through the roof. For options, it's tough. It's tough. So spreads aren't a bad idea at all, at all. And I'm not, Frank, I'm not a big spreads guy, but without a doubt, if you're trading options, that's the smarter play right now. Because they're pricey. Things are overvalued on both sides, right? Because the moves are sick. The moves are sick. And I don't know, I see a lot of you guys, some of the guys in the room have done really well. I haven't been doing much at all day trading, I'm talking about, because it's too crazy for me. And without, without sweepers, I'm a lost puppy. I don't know. I'm not rolling the dice on my own. I get my ass handed to me. So today was one of the few days that I really traded intraday. I got long this morning for that squeeze, but that's about it. And again, I'm not playing the short side. A lot of you guys have been doing well on the short side. That's where a lot of the easy money has been. So, again, not everybody don't listen to what these people on social media are telling you, that they're printing their own money in these times. They're full of shit. Yeah, the problem, Sam, with these things, see, again, they're all good companies. It's just, there's no answer. Nobody can give you a right answer. Okay. It's not saying Zoom is not going to be around and be a real company. When a stock does this, okay, this is almost like the inevitable. It's only a matter of when and how long it will take. You know what I mean? Like when you start scrolling back on these things, guys, they make sense. This is crazier than what's going on now. Look at this. This is straight up. You know what I mean? This is no uptrend like this with corrections. This is lunacy right here. Okay. And when you see lunacy over a decent length of time like this is crazy. Okay. Ultimately, something like this has to happen. Has to. Yeah. That's because I'm an old man, Jared. That's all. But I tell you guys the stories again. I'm probably showing my age. This is not new. This is not new. Okay, they don't have to be pets.com or some zero revenue EV play to go into crazy corrections like that. Okay, US Steel was an absolute beast. It was Zoom back in the day. It was Zoom. Like, you guys don't believe it. They go through cycles, and when X was doing this, you think people thought, you guys, X was a blue chip. It was in every portfolio across the universe. Okay, it's easy to say now that it's highly deaded and a piece of shit. Back then, it was a blue chip. Everybody owned it. Okay, and this is a weekly chart. Look at this debacle. Okay, like you talk about Zoom. Look at all this after that run. Lourdes is oohing and ahhing over there. It's crazy. Okay, the thing is, like tech, I won't say tech, they're rare to go into as long as some of these cyclical names are, but again, that's up to now. You never know the future. But home builders Oh my God, you guys don't understand. You guys don't understand. Home builders were FANG. Okay, they were the FANG names. I know people that just traded home builders. How about that? You guys would look at that those people like had no clue what the hell they were doing. They were just trading home builders. Why? Look at this. Okay, this is a weekly chart. Weekly. These things, parabolic moves, I can't even tell you the size of these moves. Okay, Beezer, is this thing still around? Yeah, okay, 17 bucks. This thing was an absolute beast. This was my favorite one back in the day. Okay, split and everything. Where's that big move? I gotta scroll back. It's back here. Look, come on, chart. Look at this trading view. I'm gonna kill it. Back here. You bought every dip in it. It was an ATM machine. Every pullback, you just bought these stocks. And then, that was before 2008. Look at this. Never survived. You remember Beezer? Hovanian, is that still around? That was another one that, I don't know if they're around anymore, Hovanian. Oh my God, it's still around, Hovanian. Okay. You don't even hear about these names anymore. So guys, that's what I'm telling you. These oil stocks, you guys remember how long they were out of favor? When crude had that big run over $100, do you know what these oil stocks were doing? Forget about Apple and what they were stronger than these names are now. So it's not unusual. You know what I mean? It's not unusual. And what's going to happen is it takes time. You're going to see the company. Everyone could have an idea who's going to survive. The companies that really survive, you'll see they'll make their way back. You'll start to see constructive price action where the other ones just go dead, right? And sometimes they go dead for ages and then they come back. You guys don't remember Microsoft, right? Is a stud. Do you know Microsoft was the worst stock on the board? You couldn't buy Microsoft. You were pissing money away. Exactly. Look at this move in Microsoft over the last, 10 years. Oh my God. But Microsoft, okay, here you go. Okay, here's this, look at this. Into 2000, here it is, and look at this. Look at this. Micron was even worse. Micron, AMD went down to $1. Qualcomm, Cisco, you name them. WorldCom went out of business. Bernie Ebbers, So that's why you relax. Relax. There'll be the beauty about, like, if this is a true reset in tech, okay, and it looks to be in growth, the best part about it, I kid you not, and Lourdes, you'll vouch for me here, the new leaders, right? You're going to find the new names, the new guys, the new hot growth names. That's where the money's going to be made. Yeah, that's what I'm saying. You can't get caught up on all the old names. Don't get me wrong, you play them, you got qual, you buy them on dip. It's the new names that you just start to hear about, that don't have to work through all of the burden because they're new, they haven't been around. Yeah, but like Shop, right? I mean, Shop wasn't around with Amazon, Microsoft, right? And then when Shop came around, look at Shop. All right, look at all these names we've seen, all of them. So you're gonna have new leaders that fare even better than these stocks that went bananas during COVID. Shop is Canadian, right? I keep forgetting that. I keep forgetting it. But you gotta try not to predict too far out. You gotta keep your eyes open, and that's why I tell you, the most important thing about being careful when things are running on fumes and getting overheated, because if you get caught with a bag, not only are you losing money, it feels like shit. You're not paying attention to what's going on. You understand? You miss the next shop, you miss the next SE, you miss the next D-Dog and net because you're staring at your stocks that are having trouble. Thank you. Right? It's so true though. You're hoping your stocks come back and you're not paying attention to all these new names that they don't have to work through any resistance, nothing, no sellers. That's what we look forward to when things turn. Trust me. COVID, guys, is a great example, a recent example you all just lived through. Okay? Look what went bananas out of COVID. Right? Look what went bananas. Now, if you owned cyclicals or whatever during COVID, right? Forget it, you're pulling your hair out of your head, hoping they came back. They came back eventually, but look what you missed off those COVID lows, the opportunities. Yeah, so that's what we're trying to be patient for here. You know, we all want to just run out and buy off the first pullback and, you know, but that's what we want. That's the big picture. You understand? That's the big picture out of this. It's not nailing the lows, a tactical low off Amazon. It's not about that, right? It's about having the bullets to fire for when it turns. That stretch, it's not going to last a week. You know what I mean? It's not going to last a week. Whenever it comes, whenever it comes. And what I'm telling you is, it doesn't have to be the market going up in a straight line like we're used to. The market could do nothing and go sideways, and there'll still be under the hood, underbelly names doing their thing. You know? So patience, trust me, please be patient. It's worth it. It's worth it because that's where you make the money. That's where you make the money. Yeah, again, Jay, play. I'm not saying, trust me, from one degenerate to another, play. I'm not saying don't play, but remind yourself of the big picture. You know what I mean? Remind yourself of the goal here. You know, that's where you got to remind yourself. So that's what I'm saying. The easy approach, and I need to do it the easy way to keep my sanity and clarity, right? You think you could get a bounce here, right, of what we discussed at the start of the webinar? You know, put on some S&P 500 exposure, okay? Try to buy it into weakness, give yourself a little time, right? See if you catch a bounce, but don't bury yourself, okay? That's not where you're going to paint your P&L. The P&L is going to get painted when we get a nice, healthy stretch where sweepers are tattooing names, right, that people aren't even aware of yet. And these things are breaking out, even hopefully with the market not even doing much. So play, but, you know, keep some bullets. Yeah, and again, don't get caught up on the trend of the overall market. Because like I said, the NASDAQ bubble was a big lesson to me because I remember how many people were negged out and knocked out of the game and just depressed with the market, and they missed out on. I was fortunate because I had nothing. You understand? I just got into the game 97, 98. I didn't have much to lose in the tech bubble. So everybody was making money into 2000, right? You know, driving their car, sipping champagne. I was still a little piker and I had no money to make money. But I stepped in shit because when the NASDAQ bubble blew up, I wasn't involved to lose the money. And just being in front of the screen, I saw a rally in small caps that was developing that was honestly even better for me than the NASDAQ run because they were $2, $5, $10 stocks that were doubling and tripling. You know, so all these stocks were doing that while the NASDAQ was getting burnt alive. You know, and it wasn't just that. I think it was even the home builders going nuts while the NASDAQ names were getting lit on fire. Nah, sweepers weren't around then. There was flow, but not like now. Forget it. Back then, Tree, legitimately, the smart money played in the option market. That's why when you saw something, it was really unusual. That's where unusual activity started, that term. You know what I mean? Now everything's unusual activity, right? Robinhood is unusual activity. But back then all of us couldn't play options. It was so difficult you had to be an accredited investor. You know, you have to get approved. Yeah. And now, you know, now options have blew up, you know, it's bigger than the equity market options. It's insane. It's insane. You're right, Presley. There's gambling all over the place. Speaking of gambling, I'm getting a foot, 1 to 2 feet of snow. I'm going to go on my DraftKings FanDuel account and I'm going to lose all my money. I think I'm going to bet the whole entire college hoops board tomorrow. No market. I'm going to take the needle. I'm going to bet the football game. I'm not a big football guy. I know you guys think I'm nuts. I'm not a big NFL guy, but I had the Bills to win the Super Bowl. I lost that in overtime. I thought I had a good shot for that too. Yeah. I thought the Bills were going to win the Super Bowl this year. I had a gut feeling about it. But this week I don't really like, I like the Rams. I like the Rams. What are they laying? If they're laying 3.5 though. I hate that half a point. I don't like laying the half. All right, Lourdes, we'll go partners. But yeah, I like the Rams if anybody, but nobody else on there. Randy, all kidding aside, they better step on it because if it interferes with the season, I'm gonna lose my mind. I have an account with a couple of them. Because as soon as we got approval here, Tree, you know me, I went nuts. I use DraftKings and FanDuel, DraftKings primarily. You know what I really enjoy doing? I don't know if you guys do it. In-game betting. So like if I like somebody and they're down early in the game and I get a better line, that's what I like to do. Oh, I love it. So like I give an example. Let's say I like a college hoops team, right? They're +3, right? They'll be down 11 in like the first 3 minutes, and all of a sudden the line goes to like 8. Now I get 8. You kidding me? I love that. Yeah, you guys are, me, I need the action, Norris. I need the action. That's my problem. I need the action. It's like I need to root for something, you know, I need something moving around. Total degenerate, Mike. Total degenerate. I'm not denying it. That's the first step. Yeah, I'm a big baseball guy. Love that. That's really the sport that I follow. That's the sport that I can watch without putting money on it. Everything else I got to put money on to watch. I kid you not. I'm a Yankee fan, diehard Yankee fan. Yeah, Jared. I knew I didn't like something about you. I just couldn't put a finger on it, Jared. Mariners, they had a decent little team, right? They got a decent little team. I just hope the season gets started. Go Expos. I love the start of opening day and everything. The weather starts to turn. All right, guys, enjoy your weekend. Oh, the Jays. That's a fun team to watch right there. I love that Jays team. That's a good team right there. That's a good team. I think, honestly, they win the World Series next year. I kid you not. I think the Jays win the World Series. Yep, thank you. Anybody in the East Coast, stay safe, be warm. Okay. And again, just to sum it up, still we need to be patient, keep our eye on the big picture, but let's see if we get a bounce here. All right. Again, we got some sentiment support at the lows, should hold up. My pleasure, Tree. Always a pleasure talking shop with you guys. Enjoy the weekend, and I'll see you guys next week.